Hello, and thanks for joining us this morning. I'm Samantha Partington, freelance journalist for Mortgage Solutions. In today's Masterclass, in partnership with Skipton Building Society for Intermediaries, we'll be discussing last week's budget and what it means for the mortgage market. There were a few big announcements directly aimed at the mortgage and housing market, but the Chancellor's main theme was tax rises, some £40 billion of them, which will either directly or indirectly affect our sector. Here to help me unpack all the budget news and its knock-on effects are two of Skipton's mortgage experts, Jen Lloyd, Head of Mortgage Products and Proposition, and Lucy Lewis, Senior National Account and First-Time Buyer Lead. At the end of our discussion, so we'll be having a chat for about 45 minutes, and at the end of our discussion, we're going to have about 15 minutes for any questions for you to submit at the end, and there should be an Ask a Question button in your view. So feel free just to pop those through and then we can have a chat with our experts at the end. We've been having a few technical difficulties this morning, some Wi-Fi issues. So instead of seeing our lovely presenters' faces on screen, our lovely experts, I should say, on screen, we've got some headshots instead. So do bear with us, they have dialed in, so we should be fine. So we thought we'd like to kick things off with asking our audience a poll. We basically like to just sort of garner your general feelings about the budget and its impact on the mortgage market. So I'm going to push that now out to you now. Okay, so you should be seeing that come up on your screens. And I'm going to ask the same question to our experts, and then we'll have a look at what your results, see how much they match up. So Jen, I thought we could come to you first. So before we dive into the Chancellor's specific plans to, as she put it, restore economic stability in the country, what was your overall impression of Labour's first budget? And was there much for the mortgage market to get excited about?
Morning, Sam. Morning, everybody. I will say I am excited to see the results of the poll because I wonder, I don't want to influence what people are thinking, but I'm certainly, have you got the results back?
Let's have a look. Just give everybody another second just to make your vote and I will gather. Okay. Right, let's have a look. So just over 50% were underwhelmed.
Okay.
Yeah, we have 40% cautiously optimistic. And then we got about 10% were utterly despondent. So what do you think about that?
Oh dear. Well, I can't say I'm surprised. I think I could probably fall in between cautiously optimistic and a little bit underwhelmed. I think I'm glad I'm not on my own. I wouldn't say I'm utterly despondent, and hopefully those few people that are feeling that way will feel a little bit more bright once we've finished our conversation. Clearly, there were some positive elements for our market, and most significant, which I know we'll talk about later, is the £5 billion boost into the housing sector. I think there were some parts of the announcement from Rachel Reeves that were definitely more divisive and we know could have real impacts on the market. So things around changes to stamp duty, a couple of changes there, national insurance contributions, minimum wage changes. I know we'll get into more detail on that later, but yeah, I think it's safe to say it was a jam-packed budget in general in terms of our own sector, some positive, some potentially concerning announcements, which I'm looking forward to unpicking with you both today.
What did you think, Lucy? Were you surprised at the poll result?
No, I have to say not entirely. I think we all, go into budget phase hoping that we're going to see lots for the industry. And I think when the Labour government started, there was a lot of talk about building and what they could do for the sector. So I think underwhelmed is probably that. It probably comes from that. You start to see it drip out in the media, don't you, before the budget, and you start to think what's going to happen. So I think I'm probably the same as Jen, kind of on the fence, I suppose, between being underwhelmed and having hoped for more, but at the same time being cautiously optimistic. There are some things in there that I think are good for us, as long as it continues in that vein and they do what they say they're going to do.
Yeah, indeed. Lucy, just to stay with you then, what do you think were the biggest missed opportunities for the mortgage market in this budget?
I suppose there's a few things that we were kind of hoping to see. So certainly at Skipton, we would have really liked to see something regarding LISA and the amount that people are able to put in. So, you know, we were one of the first building societies to launch LISAs, and there's not really been any changes to them since 2017. So people, you know, they're capped out at their £4,000 a year. They've got their 25% government bonus, but we know that that's going to be frozen until 2030. So kind of we were hoping to see a little bit more there, I think, and perhaps some kind of incentive for people to help them save for that first property. Certainly stamp duty limits, I think it's fair to say we weren't necessarily surprised that they're reverting, but I think we were all hoping that they would have kept them as they were and kept the higher limits for first time buyers, definitely. And certainly it would have been nice potentially to see something for downsizers around stamp duty. I know it's something that UK Finance had asked for in their Homes We Need publication, you know, looking at last time buyers and how to encourage people to kind of move out of those bigger family homes and move into something smaller to kind of free it up for other people. So it would have been nice to see something there to kind of I think it would have felt that we were being supported and that they were trying to get the housing market moving. And obviously there was quite a lot of talk, wasn't there, in a few months before the budget about whether or not we would see Help to Buy coming back in some form or other. And obviously that then went very quiet. And there's been no replacement. So I think we're clear it's going to be the industry working still to see what they can do rather than anything from the government there. So yeah, a few missed opportunities certainly from what we were hoping we might see.
Yeah. Jen, anything you wanted to add?
No, I suppose the only other thing that I was there's a couple of bits actually I was hoping to hear more from the government on, but I'm keeping cautiously optimistic that will still come, because clearly we know the budget is a big event, but that's not the only opportunity that the Chancellor has to set out policy. Sustainable homes and the need for government endorsement and supporting landlords and also homeowners in making their homes more energy efficient. I think it will be nice to see from the government some more prominent narrative and policy commitments around the kind of improving around sustainability when it comes to housing. But, you know, I'm keeping my fingers crossed for the future on that one.
Good. One thing I did want to talk about actually, which is sort of the knock-on effect of the budget. Since the budget was announced, we've seen some lenders increasing mortgage rates. Mm-hmm. I just wanted to get your view on why this is and what the outlook could be for mortgage rates for the rest of the year and sort of towards the beginning of next year in light of the budget announcements. Jen?
Yeah, first of all, I'm not going to give a prediction in terms of what will mortgage rates be next year. It's very hard to say, but absolutely can talk around what we saw in the market as a result of the budget. And you're right, Sam, we did see volatility, especially immediately after. So we saw a rise in the cost of government borrowing and a fall in the pound in the markets. But I think back to the optimism point, the context here is really key. And the initial moves that we saw on the bond and currency markets were about a tenth of the size that we're seeing after the Truss quartering mini budget in 2022. So I think last week after the budget, the pound dropped 0.8% against the dollar. That was a 2-month low, but came back up again by the end of trading on Friday, and it was settled about 0.5% lower. And if you just compare that to what happened after the 2022 fiscal event, we saw the pound fall 8% against the dollar, which was an all-time low. And clearly that had a huge ramification on the mortgage market at the time. The increase in the cost of government borrowing, it does have a bearing on swap rates and therefore the rates that are charged by all mortgage lenders to borrowers. The other key influence on swap rates is the market's view of the Bank of England base rate. back in September, the expectation was that base rate would get to 3.75 by August time next year. And actually, Goldman Sachs in October were predicting that we'd see base rate reach 2.75 by the autumn next year. Wow. Clearly, that was very optimistic, but we're in a very different position now. So the market view now is much more conservative. We're expecting base rate to get to a low point of 4% rather than the 3.75, and only getting there by October 2026. So that kind of the trajectory of the reductions has moved further out, and that has meant that swap rates have risen sharply. So about 25 basis points just before the budget was announced. And that's being passed on by lenders in their rates. And we saw lenders kind of withdrawing or repricing in the last week. It's quite difficult, and I really sympathise from a broker point of view. We've obviously got the MPC meeting on Thursday, and the market widely expects a cut on Thursday of 25 basis points. So trying to position the fact that we're seeing a reduction in base rate, but mortgage rates are increasing is difficult. And it's all about that longer term view, and the way that mortgages are priced, it's thinking further out than kind of what's happening this week. So that reduction that's priced in for Thursday, it's expected, and it's already reflected in the rates that are being offered.
Right.
Clearly, some silver lining for any customers that are currently on a tracker. As we see base rate reduce on Thursday, if all goes to kind of market expectations, those customers will see an immediate benefit in a reduction in pay rate. So that's a silver lining. And I would say, slightly higher mortgage rates are here for the considerable, next kind of time. And it's just really more important than ever to have those advice conversations and make sure borrowers have all the information that they need and they're happy to make a decision based on what we know now.
Yeah. I thought we'd have a look at possibly the most positive announcement for the property market was the £5 billion to boost housing, which comprised of lots of different pots. I think the big one was the 3.1 billion for SME and build to rent developers. And then there was an extra 500 million into the pot for affordable homes. And then some smaller sums to bring forward different sites across the country. What did you make of the sum offered, Lucy? Do you think it's enough to get the country on track to delivering enough homes, given the government's, ambitious target? Or would you have liked to seen anything different from that?
Is it enough? I think time will tell. But I think certainly it's a very good start. And I think, we have to be positive about the fact that the government is kind of putting their money where their mouth is, and they are looking to do something. So that's a real positive. I mean, we've seen a lot in the news, certainly last year or two, about the UK being in housing crisis. I've seen different reports. So Centre for Cities said that we were 4.3 million houses in deficit. A government paper last May said that we'd need to build 340,000 houses, new houses every year, and 145,000 of them would need to be affordable to be able to, ensure that everybody has a home to live in. So we're probably starting from a difficult place, I think, and I don't imagine that anybody actually thought that the government would be able to come in and wave a magic wand and be able to fix everything immediately. As lovely as that would be, don't get me wrong. I mean, that would be wonderful, wouldn't it? But let's be honest, it's not really going to happen. Certainly, social housing is a challenging area, and I think so the amount of available social housing has fallen certainly since the 1980s. So it's really good to see that the government are looking to do things for the Affordable Homes Programme. So they've committed an extra 500 million to the Affordable Homes Programme, which they're saying is going to build an extra 5,000 homes, which puts investment in the housing supply up to 5 billion for 2025 to 2026. Is it enough? Quite possibly not. Is it a good start? Yes, absolutely. And let's be honest, we need to start somewhere. I mean, the government announced their big plans, haven't they, of building 1.5 million homes within the next 5 years.
Yeah.
But they've got things that they need to fix first. So the planning system is one of the things that they said they were going to focus on, because obviously they feel that's an area where things do get stuck, essentially. And as part of the budget, they have announced that they're going to train up some more graduate and apprenticeship planners. So certainly you can kind of see the trajectory that they're looking at going in, and it does feel like they have been speaking to the industry to see what needs to be done. So I think for me, the jury's out a little bit. It's a good start. It's really positive. I'm pleased that there are some positive announcements for the property market, and I'm pleased that they are recognising, that things need to be done. Whether it's enough, I think time will tell. Let's have this chat in 5 years and see where we've got to.
One of the plans that wasn't mentioned in the speech, but it was written into the budget document that we were all scouring afterwards when we were writing up the news for Mortgage Solutions. It's the government's intention to meet with the industry this autumn, so almost immediately then, with a view to making the mortgage guarantee scheme permanent. I wanted to ask if you thought this would have a big impact on the availability of high loan-to-value lending. Just a bit of a spoiler alert there. Before I wrote that story for Mortgage Solutions, I got on the phone with some brokers, and they weren't particularly enthused by it. They didn't really think that of all the schemes that the government could have mentioned in the budget, this really wasn't the one that is going to hit the mark. So I just thought, Jen, perhaps if you could give us your view, do you think this is going to have much of an impact? Let's say they do make it permanent on the ability.
Yeah, I think the intention behind the mortgage guarantee scheme, if we all remember, was around kind of incentivizing lenders to come back to high LTV lending in the aftermath of the COVID pandemic. Because clearly, as we all remember so well, the market really reined back from high LTV lending and availability of mortgages for would-be first-time buyers, particularly those with a lower amount of equity or deposit, were really limited, if at all available. And I do think that any support from the government in kind of encouraging lending at high LTV is valuable, because we know how important it is. So thinking about first-time buyers specifically, our own data has shown that the average deposit needed for a first-time buyer, even if it was just a 5% deposit, you're looking at around £15,000 in the UK or £25,000 in London. That is a huge amount of money. And if you revert to the 90% level, that doubles. So clearly, trying to find 30 grand when you're working and renting, or £50,000 living in London, it is a huge mountain to climb. And so having availability of lending with a 5% deposit is clearly really important. We know that lots of lenders are using the mortgage guarantee scheme. We aren't one of them. Several of the lenders in the market don't currently use the scheme. We don't need to use it. And our commitment to first-time buyers means that we absolutely support lending up to 100% loan to value. But I would say that having that availability widespread across the market is really important. Would we still have the availability without the scheme? Maybe yes, maybe no. But clearly it's helpful. Lenders are using it and it's keeping that availability there. So I would say it's good. Is it the right thing? Is it the one that I would have prioritised? Maybe not. Particularly given that we're not benefiting from it right now because we've chosen not to participate. But yeah, I think it's no bad thing, is it? Having high LTV lending available for first-time buyers and next-time buyers as well who want to kind of put down a smaller amount of equity. It's a good thing. It's just not. I'm not blown away by it, I would say, Sam.
No, not many of the brokers I spoke to were either. I just wanted to ask Lucy, actually, so sticking on the theme of deposits, and we mentioned this at the beginning of the missed opportunities, a blow for home buyers was obviously the Chancellor's decision not to extend the temporary increase to stamp duty thresholds or make them permanent. Again, we weren't really expecting them to, but perhaps it's one of those rabbit in the hat moments. It didn't happen. How big a blow is this for buyers, and what help is there for those already struggling to save a deposit? Now they've got to save extra for stamp duty. I mean, there was some figures, quite a lot of companies have done analysis in this week that's passed. And, it seems to be that home movers, those who already own and they're going to move, will pay something like on average an extra £2,500. But it really does depend on where you live in the country. So, how big a blow is this for buyers already struggling to save a deposit, Lucy?
Yeah, I think it's an interesting one, isn't it? And you're kind of in a different position whether you're a first-time buyer or a home mover, really. And we've seen that with the affordability conversations going on in the industry over the last year. In some ways, it's almost, whilst it means that first-time buyers need to save up more, because obviously they're going to have less help at the start with the stamp duty. What that might do is it might just put them back. So it might mean they have to save for additional months before they buy their first property, or it might mean that they look at their first property and they change their budget slightly and they look to buy something a little bit cheaper, because they have that option. That's kind of where we got to with the affordability challenge earlier. And when I spoke to brokers about the interest rates rising, they were saying that it's not actually first-time buyers who were particularly affected, because they just adjusted their expectations of what their first property was. It's the people who were affected by the affordability challenges and rates going up were actually the people who already had a mortgage and a property, and therefore they were committed to that. So I think in some ways for first-time buyers, we're going to see people having to readjust, and readjust to their saving and readjust to the potential property that they're looking to buy. But actually, people will do that, and they are agile. So whether we will see people looking to buy, not necessarily the 3-bedroom starter home, but more of a 2-bedroom, or whether we'll see people looking towards flats, that might be a possibility, and we might see more steps as well within the home buying journey. Now, obviously, people are buying properties with less regularity nowadays, so we might see that change. It'll be interesting to see. But I mean, let's be honest, stamp duty aside, it's incredibly challenging to be a first-time buyer at the moment. I think the BSA report said that it's as difficult as it has been for the last 70 years. And unfortunately, the government keeps reducing the stamp duty threshold, so not holding that higher amount is not helping, if we're honest. And we would have really liked to have seen that extra bit of support. What we may see is people deciding that absolutely now is the right time to buy, whilst the stamp duty threshold is still higher, and we might see a bit of a rush on people trying to buy that first property before the end of March next year. So that will be an interesting one to see if that does make a difference there. Obviously, it won't be as big as previous stamp duty holidays, but we might see a bit of a change there. And certainly the start of the year is a time that first-time buyers look to buy their properties anyway. So whether that will be moved forwards towards kind of now time, we might see that. But yeah, I would say it's disappointing. I think the good thing is we know that most first-time buyers actually go to a mortgage advisor and they take mortgage advice. And, they're going to seek advice from a professional who absolutely knows what they're talking about and who can talk them through what they need to save, what the best option for them is, and how to do it. So, at least they have somebody there to hold their hand. And I guess from a lender point of view, it's up to us to look at what else we can do to help. So, from Skipton's point of view, obviously we've got our track record products, we've got our income booster products, which also help people who've got affordability, to get a bit more affordability. So maybe you'll see a little bit more innovation from lenders as well, looking to help more first-time buyers.
And it might perhaps be also some reassurance that's needed from brokers to their first-time buyer borrowers, because, again, another piece of analysis that came out was looking at how many regions in the country wouldn't be affected by the lowering of the threshold for first-time buyers from 45 back down to 300,000. And I think there was like 5 or 6 regions that they won't be affected. They won't be caught because their average first-time buyer house price is perhaps around 250 or something like that. And with this message going out that, stamp duty thresholds have fallen and the relief for first-time buyers has also fallen, they might automatically think that now they are facing an extra bill. They might not be. So perhaps that's another thing that, brokers, again, can reassure them and tell them whether or not that will affect them.
Yeah, absolutely. And I do think, some first-time buyers, when they go to the broker at the start, they don't really know very much about the house buying process. So I think brokers, they do a really good job of educating people as to, what it entails and the money they're going to need, etc., etc. People don't necessarily go because they're ready to buy. People also go because they're thinking about buying and they're interested to know what they would be able to buy. And I think brokers, like you say, have a really important role to play there. But yeah, it's certainly going to be trickier in the south, isn't it, than the north?
Definitely. Just sticking on stamp duty then for a moment, landlords and second home buyers faced an immediate rise in the stamp duty surcharge from 3% to 5%. They were left out of any hikes to capital gains tax, but I don't think anybody expected that immediate rise to the surcharge. There's been mixed opinions on the impact that this will have on the market. I saw a line on the BBC from the Treasury had said that this move would be beneficial to first-time buyers because there would be less competition from second home buyers, and it could result in 130,000 additional transactions by first-time buyers over the next 5 years. So Jen, I just wanted to gauge your thoughts on this rise in stamp duty for landlords and second home buyers, how you think it's going to affect the market.
I think it is a really interesting one because there are two sides to it, and I absolutely understand and kind of recognise the government's intention behind it. And when Rich Reeves talks about it giving first-time buyers more of a chance to buy, that I get that could be a potential impact because arguably there will reduce competition for properties on the market, and first-time buyers will have that advantage for sure. However, the other side of the coin is the impact on landlords, and there are commentators out there that have asserted that we might actually see a squeeze on the number of properties landlords want to buy to rent out, and that could see that being passed on to tenants in the form of higher rents as that property becomes less available. So it's really difficult, isn't it? And I think that we're going to have to wait and see how it plays out and see what, if we do see an additional 130,000 first-time buyers able to buy a house as a result, and that's no bad thing, is it? But I am, skeptical to a point whether how much it will really directly impact on first-time buyers. I hope that it works. I hope that it is the right outcome and that it does have the desired effect. But I do also think that it is difficult for landlords, and I would hate to see that kind of being passed on in the form of increasing rent, because we know that's already at really high levels, and putting pressure on first-time buyers when it comes to trying to save for a deposit as well. So yeah, and I think the immediate implementation is also taken people by surprise. It could also impact on kind of chains currently in progress now, and that's something that is quite close to home for me. So my sister's buying a house, and she's moving house. She's buying her first home with her partner. He owns his current home, and the person that's buying that from him is saying, well, I'm going to have to pay more stamp duty now, so I'd like to charge that to you. And if that's happening in my family, I'm sure that's happening across the kind of market in terms of existing chains where people thought they had their figures, and we know how long it takes for completions to kind of go through on average. There were people that were not expecting to pay this additional tax, 2 weeks ago, and now they're going to have to factor that in. And will that kind of threaten existing chains? I really hope not. But it's an extra facet that I hadn't really thought about. So yeah, we'll wait and see. Let's hope it's good news for first-time buyers.
Yeah. I think it will be perhaps a couple of months before the data feeds through on the number of fall throughs, and we see they did rise. That would be really interesting.
Yeah.
One of the policies mentioned, well, it was probably one of the biggest, that on the face of it doesn't look like it's directly going to impact the mortgage market, but it will indirectly. Tax increases are obviously the main billing, and particularly increase in employer national insurance contributions. And this is still, we're still seeing the shockwaves of this come through on news stories where different business owners are sort of saying how much difficulty this is going to cause them. Could this have an effect on borrowers already squeezed? So obviously, borrowers can be business owners, self-employed business owners, brokerages. Could this have an effect on borrowers' already squeezed mortgage affordability? And is there anything that brokers could do to help? Lucy?
Well, I guess the short answer is yes, it absolutely could have an effect. Obviously, you've got the national insurance contributions for employers that have gone up, but you've also got the minimum wage that's going up quite substantially. So, it will depend on business models and the kind of business, but certainly I would anticipate that some businesses will be quite substantially affected by that. And it's an interesting one, isn't it? I mean, my husband's self-employed and we were kind of talking about it because obviously, the rhetoric of it's not going to affect the average working person, but actually so many people are self-employed and run quite small businesses. So, they are all working people, as are, I'm sure, lots of self-employed brokers listening to this. So it's definitely an interesting conundrum, isn't it? I guess taxes have to go up and where to do it, and that must be a challenge for any government looking at their budget. But certainly from a mortgage affordability point of view, I think it will depend on the firms. I think it's going to mean the need for advice is even greater, and certainly I think self-employed people absolutely should be going to see a mortgage broker and talking through their needs and their circumstances so that actually they can get a product that's appropriate to them. It's gone are the days where people can just go into their bank, where they've got their current account and actually speak to them about it, and we've got so many different lenders with so much different criteria in the market. Absolutely, there will be options and there will be things that brokers can do to help people. I mean, certainly we're very conscious at Skipton. We've had conversations relatively recently about the number of first-time buyers who are self-employed as well. And the fact that lots of first-time buyers, the younger people now, they are entrepreneurs. They do different things, or sometimes they have more than one job, or they're contractors. And we've looked at our criteria to see, what we can do to help. And in fact, we've changed it recently. So not only do we take salary and dividends, but also we'll look at net profit. So we give brokers those two options to look at for people who are self-employed. So yes, absolutely. I think a broker can do things to help, but they're already doing it. It's a case of being aware of what's available in the market and what options they can do, and tailoring it to people's needs and circumstances. And to be honest, that's what our brokers do so brilliantly. So yeah, I think we're going to see a bit of a challenge for the next couple of years. Did they say kind of 2026 is when they're really going to see it and people are going to feel it? So we will see a bit of a challenge, but just another one, isn't it, to add into the mix?
Just another challenge. Yeah, I think there was a nervousness around as well how, this is again from brokers, how it might follow through into pay packets. So employees that not rely on, but have bonuses or, that sort of irregular income, but is still employed, that how, their employer now having this increased burden of higher taxes to pay, then that might filter through into lower bonuses. And there was concerns about how that might affect borrower affordability, or even cause lenders to be a little bit stricter on how they take into account irregular income further down the line, perhaps not straight away, but in a year's time or stuff when this starts to filter through.
Yeah, absolutely. And I think that, I've read concerns about the effect that will also have on inflation, because obviously in retail, it will put the cost base up, and therefore will they need to put prices up to cover that. So that's definitely another point. But also there's a challenge for broker firms, because, a lot of broker firms are quite small companies, with under 10 people working there. So I think that it could have a real effect there as well, and on their cost basis.
Yeah.
So yeah, challenges across the board.
I wanted to just have a chat about inheritance tax as well. So the inheritance tax threshold remained frozen at 350,000, and it will do so now until 2030. While inherited pensions, which were exempt until now, will be included in that calculation of the estate's value. So I just wanted to find out if you thought this would help or hinder the Bank of Mum and Dad, because there was some positive sentiment around the fact that the IHT threshold had been frozen, but then the other view was that as house prices rise, more estates are going to be dragged into the threshold. So, you know, what might this do to the Bank of Mum's capacity, Bank of Mum and Dad's capacity to help their kids get on the ladder with a deposit? Jen?
Yeah, I think it's interesting with this because the fact that the threshold has been frozen, I guess when we say it's a positive, it's because it hasn't been reduced. But we know that it's been the same since 2009. And so in real terms, when you think about inflation, it's clearly kind of less than it was previously, which is why tax planning is so important when you're looking at inheritance. The fact that pensions are going to be included will obviously mean that it's going to have an impact on the amount available to pass on. And we know that sometimes people are relying on pensions and things like that to pay off mortgages to make them have that kind of equity available. So I think it will clearly have an impact in terms of the amount of available money for people wanting to pass it on to first-time buyers. And I think that we need to think about, as an industry, what we can do kind of before we get to the point of inheritance and taxation on there. What can we do to help the Bank of Mum and Dad, and also help kind of beyond immediate family members? What product and proposition ideas can we work on as an industry to provide solutions before we get to the point of inheritance? You know, how do we encourage downsizing in the market? How do we enable kind of savers to be connected to would-be buyers and kind of help to distribute the wealth and help more people get onto the ladder? I think that there's much more we could do as an industry in general, kind of tax changes aside. I feel that there is a real lack of innovation when it comes to supporting the Bank of Mum and Dad. I know we've seen some kind of examples here and there, but nothing meaningful. And maybe that's something the government could think about as well in terms of future housing policy. What can they do to better incentivise kind of the sharing of wealth to enable home ownership for more people? I'm really hopeful about that in the future. But again, have to wait and see what happens. But yeah, watch this space, I guess, on that change.
So we're coming to the end of our main discussion. I just got another question. But so if anybody that has a burning question that they'd like to pop through into the ask a question box, then please do so now. Lucy, I just wanted to come to you for the final question. Do you think, well, this is probably a bit of crystal ball gazing, do you think we can expect to see another stampede to get transactions over the line before stamp duty thresholds revert? And given what we know now from past stampedes, what advice should brokers be giving their clients now?
Whether or not we'll see a stampede, I don't know, but definitely I think we will see a very busy start of the year, particularly for conveyancers, because let's be honest, it takes quite a long time, doesn't it, to actually buy a property from start to finish nowadays. Gone are the days of it taking kind of 8 weeks. If you're in a chain-free scenario, it's much longer than that now. So I think, you know, any brokers should really be saying to people, absolutely, if you're looking to buy a property and you want to be in that property before stamp duty changes, you need to be looking at doing that now because of the amount of time that it does take. I think, you know, there's certain admin point of view with lenders. Get your paperwork back, make sure your shopping list is correct. You know, you've got all the information that the lender needs so we can get that offer out as quickly as possible and we can get things moving. But I think the brokers do play a really important role of, you know, explaining the process to people, making sure they know absolutely what is expected, and making them realise how important it is to fill in paperwork and to get documentation off as quickly as possible at the start, because, you know, when it comes to the end, if you're running around in that last week to try to get things through before the stamp duty threshold changes, it could be incredibly stressful. So stampede, possibly not. No, I don't imagine it will be as big as previous stamp duty holidays, but I do think we'll definitely see an increased amount of business going through in the first half of the year, or first quarter of the year. Sorry, yeah, absolutely.
We've already had, and it comes out every year, Homeowners Alliance, the consumer group. They always send out a story, a release in, I think we've probably had it in October, to say if you want to be in your home by Christmas, you should have listed your home for sale by now. And I'm sure it was maybe a month ago. So that just shows you, doesn't it, how long it can take. And right now, perhaps we're not in a particularly busy period where conveyancers aren't inundated. And I'm sure there's lots of people wanting to get in their homes by Christmas, but it's not being driven by this extra volume of transactions that are trying to beat the changes to stamp duty. And I suppose it gives brokers a good opportunity, and I'm sure they're doing this already. If a first-time buyer contacted them perhaps 6 months ago, considering possibly thinking about buying somewhere, now's a good chance to get in. It's an opportunity, isn't it? Get in touch with them, explain about the thresholds, and explain about that timeline involved.
Yes, absolutely. Absolutely.
Yeah. Okay, well, that draws us to a close for the main discussion. And we've had some questions come through. So let's have a look at those, and I'll pose those to Jen and Lucy. So let's look at this one. Okay, so this is a bit of a wish list, really. During the government's meetings with the industry this autumn, they've said they're going to have about the mortgage guarantee scheme. If you got the chance to sit in front of whichever government official it is to ask for alternative help for mortgage borrowers, what would you ask for? Either Jen or Lucy?
Do you want me to take that first? Yeah, of course. I think there's lots of things the government could be thinking about. And I said it at the start, I think support for sustainable housing is really important. And I'm really keen to see some more meaningful policy change when it comes to giving UK homeowners and landlords some more clarity around our transition to net zero and what the government's role is going to be in that, because clearly we know it needs to happen. We understand that UK housing stock is 20% of carbon emissions, and we know that a lot of properties in the UK are not at a required standard. But I think we're yet to see meaningful policy from the government on that, and so I really hope to see that from them, which is going to be helpful for all UK homeowners in the future. I think first-time buyers specifically, there's things that we could look at, and I think one idea that's been talked about is around beyond the lifetime ISA, reform to the lifetime ISA, so making it kind of keep pace with house price inflation and the withdrawal charge as well. So it would be great if the government could make it so that the withdrawal charge was lesser than it currently is, as they kind of did previously on a temporary basis. I think there are a couple of things. Then, shared ownership. So I think that shared ownership is going to be a key segment in the future. I think our traditional expectations around home ownership and the structures that are there in place now are shifting, and there needs to be recognition of that. And I think that shared ownership can be an absolutely brilliant option for would-be buyers. And so it would be great to see more advocacy from the government on that, and kind of some more clarity around the future of shared ownership, and kind of just more awareness, because that's the thing with a lot of things in the industry. We take a lot of things for granted, that we understand different elements, but we know that many first-time buyers and even next-time buyers aren't clear on their options. So yes, it's really important to get advice, but I would like to see from the government kind of more effort in terms of promoting the resources and support that's already there, because there is quite a lot, but awareness is quite low. So that'd be kind of on my list, I would say. Luce, what about you?
Yeah, I would agree, actually. I think on the topic of shared ownership, I think it would be good to do something about its image. If that's not a strange thing to say. I think, it's been around for quite a long time now, but I don't think everybody knows what shared ownership is. And I think it's not necessarily seen as the go-to for first-time buyers. I think it would be great to do a bit more education and to make it more accessible and to make it easier also when people come to selling that property as well. So anything the government could do there, I think would be really welcomed. And also, I think On transferal of wealth, I think that's one of the big challenges that we have at the moment. So you've got, lots of people sitting in larger mortgage-free properties where you've got people kind of struggling to get their foot on the ladder. I'd like some kind of policies, some kind of thinking, almost kind of the cross-government, cross-party movement to see what we can do and how we can improve things and make things better for people, because I just don't think we're even scratching the surface there, to be honest. We're in a difficult position as well, where you've got some people who have got family wealth and who are able to get help from the bank of mum and dad, and then absolutely you've got others who haven't, and that's not a great place to be either.
No.
With property prices as expensive as they are at the moment, it's quite a challenge for people that don't have the bank of mum and dad.
Agreed. We've got another question in asking if we can confirm the date that the stamp duty threshold is changing. So my understanding is that the temporary stamp duty thresholds are due to expire on the 31st of March next year. So they will kick in from 1st of April. So that's just a small question there, but we do have a few questions on rates that have come through. Not sure how much our experts will be drawn on these, but I'll pose them anyway. The first one actually, I think, is just a bit of clarification on when we did talk about what had happened to mortgage rates post-budget. So one of our audience members has asked, are the rates increasing or decreasing? I presume we're talking about mortgage rates. Is there a bit of a conflict? Are some increasing, some decreasing, or have they all increased a bit?
I think it's fair to say that the general shift is upwards in terms of mortgage rates. I saw a couple of outliers in the last week that did make some selected reductions, but that all comes down to timing of when a lender is securing hedging to then price from. So because the market's been volatile and swap rates have been moving around, depending on when somebody is secured, their kind of hedging for that lending will impact on their decision to deploy those rates. And we know that it takes lenders, anywhere from kind of 5 days to 2 weeks to turn a full product change around. So that kind of, in a volatile time, you can see some anomalies. The general direction of mortgage rates, I would say, is up. It has been up. The downward movement is base rate forecast. So the MPC meets on Thursday and the market expects to see a cut then. It's not guaranteed, but that's the expectation. And what I was talking about is the fact that base rate is going to be reducing, but we're seeing mortgage rates increase. And that's because of the kind of longer term expectation trajectory of base rate having changed. Hopefully that makes sense.
So just our final question then, and we'll see if you are up for answering it. So the audience member asks, fully appreciate the ladies were reluctant to predict on future rate movements. It's a tough call for us all, but would Jen and Lucy provide a totally off-record opinion? I'm not sure how off-record an opinion is when it's live, but perhaps a sort of like, a no blame kind of opinion on where the base rate might sit at the end of 2025 and the end of 2026.
Oh, wow. I mean, where will base rate sit at the end of 2025?
I mean, who knows? I guess 4% is what the market thinks. I don't know what I don't have anything to tell me that the market is wrong. But what we have to caveat it with is to say that the market is volatile and things can change. And so it is moving all of the time. And clearly we're not completely sheltered from kind of geopolitical events. We've got the US election today, and kind of overnight we'll start to see those results. That will have an impact on our markets. We're going to hear obviously from the MPC on Thursday. So one to watch for brokers in terms of sentiment and likely trajectory, I would say. Look for the minutes out of the meeting. So when they meet on Thursday, you'll see the minutes published and you can see kind of what the vote was in terms of the number of voting members kind of voting for a cut or not. And then kind of what the sentiment was, and that will again impact on the market. What I will definitely say is failing any sort of black swan catastrophic event that I can't possibly predict, I don't expect mortgage rates to go anywhere near as low as they have been. Like, that is not something that anyone needs to be expecting or kind of waiting for. I think we're at a new normal. Which way will they move? Slightly up and down? It's hard to say, but I wouldn't be banking on them coming down significantly from where they are now. Famous last words. Who knows? Lucy, what do you think?
I would love them to come down. I mean,
Obviously.
my mortgage is up for renewal at the end of February, so I will be watching it carefully and putting in my rate, and then watching them and hoping that I can move it down in the meantime, which is obviously an option. As to where it will be in 2025, I think, you know, lower than it is currently, hopefully, but I agree with Jen. We're not going to go back to the lows of you know, where it was. I think yeah, hopefully it will settle lower than it is now. That's about as far as I want to go.
Well, thank you for giving it a stab anyway. There is actually one more question that's just snuck in, and then we'll wrap things up. I'm not sure whether it's one that you will be able to answer straight away. We can always take a question offline and come back to the person that's asked it. Will clients get a refund of the extra stamp duty amount if they sell their main residence within 3 years? I'm not 100% sure on the technicalities of that. I don't know if either you, Jen, or Lucy would know, or if it's something that we could take offline.
It's not one I know off the top of my head, I have to say.
Yeah, maybe more of a conveyancing type question. But if we can get you an answer, we've got the email address there. We will get an answer to you. So that brings us to a close. Thank you very much for joining us today for this session. I hope that you've taken away lots of interesting, snippets of information, things that will help you and your clients. And I just wanted to extend my thanks to Jen and Lucy for joining us for this masterclass today. So yes, thanks everyone, and thanks for joining us.
Thanks, everyone. Have a great day.
Thanks very much, guys.